Hey, what's happening? It's Tim from EminiMind. Gonna do a trade recap video. Been a pretty good week here. A lot more trade opportunities than the last couple of weeks. So I wanted to run through a few of the trades from today, yesterday, Tuesday. You can catch the live trading session in the dashboard eminimind.com/VIP. So let's dive into today, and then we'll go to yesterday. And why don't we, I guess, start by clearing off all the drawings. And you can see we made this pullback here on the daily chart. If we take a look at the bigger picture, the fib retracement, we're at the negative 23 on the daily chart for this real large retracement. So kind of moving along the top of that negative 23. So the daily ranges haven't been huge. You know, you're talking like 30 points here. Earlier in the week there was a 50 pointer, but really not huge ranges. So nice to get a handful of decent setups here this week. So I'm going to first mark the high and low of the 30-minute range. That's the first thing I do. We didn't have a 15-minute opening range breakout today because we filled the gap. So nothing to do there. Let's go down to a smaller time frame. And the first trade, let's see, you got both logs here. The first halfway back trade was a retracement. And that was a long. And that was actually, here's the larger retracement drawn up. You can see their support at about the 15-minute mark. And then we had a break of the opposing, meaning the long here is drawn up first. This red bar, we pull back to the long first. And then if I draw up a short, notice how we trade at the short with this green bar second. So that makes the primary trend the long. We bounced off the long, 44, we'll call it 17, and that's the primary trend that we want to go with. And this short is the opposing. So we broke the opposing, meaning we broke the short. The long came up and broke the short. So if we get rid of that, and whoops, let me reset this and switch charts, and then we can draw up so that we can have them linked up to each other. So from there, I came to the 512 tick chart, and that's what set up this halfway back long. You can also see it over here at 44.1975. And so that long setup, trade a little bit into the 61.8, held its stop just fine though, trailed the next retracement, and then really didn't get a whole lot of momentum, rolled over, stopped below the 61.8 plus the 3-point first target. So that was the first retracement on the day. From there, we went higher and broke the 30-minute high. That's this gray line here. Came up right to the negative 23 and rolled over. I didn't take this as a 1-minute short. It wasn't really a hammer. You certainly could. If you look at 50% retracements and negative 23s, so going with the trend at the 50% retracement and going counter trend at the negative 23, it doesn't have to be a hammer. You're definitely going to get a lot more setups. But if you want to keep things simple, just looking for hammers and inverted hammers on the 1-minute chart is the best way to go. I will put a link below in the description to the 1-minute trading masterclass if you want to find out more kind of details on how that strategy works. But by and large, the retracement is pretty good today and yesterday. And so the second one was 726. That was here. And actually, so I took this inverted hammer as a 1-minute short, meaning I sold right here, 1 tick below the candle's low, rode that down to here. And then we bounced, because that was kind of a double top, right? The negative 23. Not the cleanest inverted hammer, but it fit the bill. So then this was the retracement short, right at the top of the 30-minute range, which is great. I like when we're above the 30-minute range. In this case, we had a double top. We came down. We broke below, broke back into the 30-minute range, and then when we bounced, 44.2350 was the short, and then that rolled over, and this one you can see over here on the 512 traded nicely, and then rolled over, trailed the stop like so, 2 ticks above, so this held. Then we rolled over, and I started just trailing each candle on the way down. I think it was a 44.19 is where I ended up getting out right down here. So that was 3 points for the first target, plus another 4.5 points. And that was it for today. The just the 2 trades. First target on the first one, plus I think a 1/4 point, and then 4.5 points plus a 3-point target on the second one. And then the 1-minute trade got about 2 points, this short here. So let's go to yesterday. And this one had a really nice, so when we're talking about trail stops, I like to start by being a little conservative. Start by trailing the next 60-1/8. Just look at the 60-1/8, round up and add 2 ticks, and then put your stop there. And so that way you give a little wiggle room to kind of chop around. And then once it gets moving, that's when, like once you break this low here, that's when you can come in and start trailing each candle's high. And that makes a really good way to lock in profit quickly and stay in the trade as long as you're with the momentum. You know, nothing worse than just coming in here, seeing the market dip, and then just hitting the flatten button because you want to lock in profit. So rather than do that, you're going to be much better off getting super aggressive, trailing your stop above each candle for a short, and that will get you, another, in this case, another 3-4 points. If we go to yesterday, I had a couple of 1 minutes. Those were right out of the gate, actually. Let's see, 6:28. Yep, yesterday. So this one here at 12 minutes in, 6:42 Pacific, below this inverted hammer, and then rode that down to here. And then the second one was 6:52. Oh, that was this guy. That was kind of at a halfway back here. This 50%. I shorted below that hammer, or that inverted hammer. That one didn't really go anywhere. Just basically break even. So the first one was like a little over 3 points, and the second one was scratch. So those are the 2 1 minutes yesterday. And then the retracement, there was a nice one at 7. I just had the one retracement yesterday, 7:29. That one, let's see, micro long in trend. Oh yeah, so that one, if we mark the top of the 30-minute range, that was here, and we set up kind of consolidating or moving sideways in the first half hour, wasn't really doing too much. But then when we did break out of the 30-minute high up here, we got a pullback. We made it almost to the 50% retracement. So again, if you don't want to wait for a hammer per se, you could just take along above the top of this high of low bar right here, and you'd be off and running. In this case yesterday, there was a halfway back. And so again, the long trend, the halfway back long here, is the larger trend. This is the uptrend. That's the long. We're going to call that traded. It came close. It didn't touch exactly, but it got close. So when I draw the short now, that's the opposing. So I want that to break before I get in on the long on the 512 tick chart. So you see here, it came right to the 61.8. It pulled back to a 50%. I didn't take that one, though, because we were still holding the short. And sometimes you just end up ping-ponging between the two 50%, and that can be dangerous. So I let that one break, and then just took the next one here. Like that. If you're ever wondering, should I draw from the low here to highs versus the higher low to highs, just look at the 2 entries. We've got a 44.0950 and a 44.09. Well, 44.0950 plus a tick is 75. That puts your stop at 44.0775, which is down here below the 60-18 of the larger retracement. So by putting your order at 44.0975, your stop is still below the 60-18 of kind of this larger one. So you kind of get the best of both worlds. If it didn't trade there, or if it traded and then kept going, your stop would still hold if it dipped a little further. So, and if it doesn't go all the way to this 44.09, then at least you're in the trade. So, and that some of that just comes with experience, but that's how I've kind of always viewed it. And so from here, then trailing our stop, just trailing the next 60-18 is a great way to do it. What I like to do after the first couple 60-18 get going, I just come in here and trail the swing lows. So let it make a new high, pull back. Once it makes another new high, then put my stop one tick below lows, and then one tick below lows, one tick below lows, yada yada, all the way up. And then we started going up really quickly here. So this was a 16, and then all the way up to almost 44.20. So when we start going straight up like that, and we're getting kind of far away from, if my stop is down, let's say down here, and all of a sudden we're starting to rip, that's when I'll switch to coming below each candle as best I can. So we come up, we make a new high, and then these next couple candles, you can just put your stop underneath each candle's low. If you wanted to be a little bit more conservative, you could trail like the next 60-18 like that instead of waiting for the swing low over here to pull back. Either way, you're so far into profitability in the trade, you really can't go wrong. It's just nice to have a plan for what you're going to do if the market does go your way, because a lot of people just plan for, well, if it goes against me, I've got my stop, and then you do all this work to get in these winning trades. You find maybe there's only 2 or 3 great setups in a morning sometimes, and if you do the work to get in, and then it goes 3 ticks in your favor, and you get scared and you get out, and then you just watch it run without you in it, it's really that's very difficult mentally, and to your bottom line, you're not capitalizing when you need to be. So that one was I think 9 points plus the 3-point first target. So a really nice day, or a nice day and a nice week. I don't think I'm gonna trade tomorrow. We got some family coming into town, and then Monday I'm not gonna trade because Tuesday is the 4th of July holiday in the U.S. So just gonna make an extended long weekend here, and that's always nice. Good way to refresh, especially coming off a nice week. So hope you have a great long weekend. No live session on Tuesday. We'll be back the following week. If you have questions, drop them in the comments below, and we'll talk to you all soon.